traders, Gary Wagner with WFGForex.com, your daily market update for gold. The market in Australia has opened. It has been trading for roughly 3 hours. It is Sunday in Honolulu, the 15th day of August, and this is the daily report. Forex gold is currently trading nominally higher, 1216.83. It's had a range of up a couple dollars, down a couple of dollars. But I think that what we're going to find interesting, and it's much too early to tell, is how it's going to react in these couple of resistance areas that we're currently at. As you notice, the top of the market is pretty much hitting this one resistance band that we get from these tops right in here. And then I think, as we talked about on Friday, if we bring over this record top, which came in at around 1221, right there, I think that this one band right in here is going to offer us some significant resistance. Now, a breakout above that point, which my personal sentiment is I don't think that we would see it, but that would put us right smack into this last one particular area when it hit its record tops. If you notice, right in this area, we had that one band of support that it found. So, is it going to run smack into a wall here or be able to break up above that? Well, only time will tell. But my personal feeling is, first, we have to see it break above this resistance at 1217, and then we really need to be able to see it take out this top formed by this record fifth wave back a year ago when we had our first historical high at 1221. Traders, I've gone ahead and I've put up our Fibonacci sequence numbers, and this is just the retracement from this A wave right in here. Of course, 0% to 100% the top of this wave here. And as you can see, not only do we have some resistance based at this 112.17 area right in here that we've been talking about, that's kind of where it is butted up against right now, but then we have some real resistance, which is our 61% retracement level at 1224. It's much too early in the week to determine where we think the market's going to go, but it does have some steam to the upside. Of course, we want to see how it reacts when it goes globally around the world as it moves into Asia, into London, and then into New York. As you know, Sundays are typically very quiet days over in the Forex unless something major has changed in between the time of Forex's close and the open. Of course, we're going to await the global markets, London gold opening up fairly soon, New York gold. And what I'm going to kind of look at for this week is, as we look at, and this is our COMEX chart, if we look at the amplitude of this wave A here, and we want to just determine straightforward areas where it should go, remember, we believe that 50 to 75% are the best rules of thumb. So let's go ahead and put up our Fibonacci so that, as you can see, what I've done is put straightforward. This is our 50% and this is our 75%. So within this range is typically where you will see this wave B go. So traders, in terms of a market forecast right now, it's still a little bit too early to talk about because I do want to see how the market reacts, as I said, with this resistance right here at the 1217 area, and see how it reacts, and then of course at that next Fibonacci level. But I can tell you this, if we do get any of these standard typical Elliott wave patterns, let's assume that it goes midway through and we get a flat correction, it would look something like this. I would expect it to maybe go back and test 1170 or 1160. If it's going to be a standard zigzag, it's going to come down and make a new low, and that low we're going to have to base it on a couple of points, but 1140, 1135 on a significant correction wouldn't surprise me. It is much too early to tell right now. And right now we're still deeply entrenched in this B wave, and this B wave might have a little bit of steam ahead of us. We're going to have to see. It's going to be an interesting week to say the least. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading. We'll talk to you tomorrow. Bye bye.